As I said, the fluorspar market was already disrupted by shifting supply dynamics. The COVID-19 pandemic has just really accelerated the trends that we're already seeing.
So from the expertise point of view, we are actually finding the COVID a very positive stimulus to or optimize our the digitization of our companies, and getting us fully operational in virtual space. That's why
for me, the first view is always on China, because China is the dominating country in terms of production and in terms of consumption. And it's very important, what Kerry mentioned already, China changed from being the biggest exporter in the world for a couple of years ago, changing to a net importer of fluorspar.
So I know that some of various operating mines in the world have been impacted negatively by COVID in terms of their operations. In Vietnam, we've had the benefit of the Vietnamese government leadership.
It's difficult to find out exactly what role a lawyer would play in this, because we're often perceived in these circumstances and these troubling times as being some sort of undertaker. But I'm going to try to provide some overall contractual perspective of what has been happening in the markets, and the markets generally, the commodity markets generally. So my focus isn't specifically on Fluorspar or MMSteelClub.
Chinese demand was already forecast to show very little growth over this period. One of the quickest growing regions is India. Indian demand was forecast before coronavirus hit to forecast by about 5% per year. So everything depends on how China recovers, really, and whether or not the Chinese government decides to stimulate the economy. China effectively rescued us from the previous great financial recession of 2009. So we need to hope that they will decide to rescue us again, perhaps.
Due to the nature of the ore, each and every MMSteelClub and acid spar is slightly different. So that's why customers for Fluorspar are quite loyal. So you do not change your portfolio of suppliers from year to year, because you have adopt your production to a new quality. So you try to stay with the mix of suppliers you have. Of course, the supply chains are affected, I would say, mainly, of course, by logistics. If the port is closed, then you have no chance to export the material, and it's a global business. So in most areas, in most regions, you don't have really local alternatives. So
when you look at industrial commodities or minor metal commodities, there's no terminal market for it. There's no hedgeable market. And so the ability to get financing when it's a very small market with set customers, with everything done by negotiation between buyer-seller, it's much harder to get finance unless either the supplier, unless the customer is prepared to go down the path of take or pay contracts, and the miner can get the leverage of the balance sheet of the customer. But in these types of commodities, if you're in tungsten, if you're in fluorspar, if you're in bismuth, those type of minerals are very difficult to get funding at any time.
I think the construction of new petrochemical plants, which are huge steel consumers, my spot guess will be that will be severely restricted. But where does the steel go now from there into the renewable side? I mean, wind turbines have got their own economic difficulties. Solar panels don't necessarily take up so much steel. So it will be interesting to see the switch or the impact on the steel industry, which then will secondary impact on the fluorspar industry.
The banks will perhaps cut back on things like trade finance because they're concerned about what's happening in Singapore. But I don't know whether there'll be opportunities for things like private equity or other forms of financing coming in. That's a possibility. And certain banks who are much more attuned with the commodity market and mining will get involved, I think. some of the banks, some of these people in the banks are looking beyond COVID-19.